Okay, fam, welcome back. So today we're going to be talking about the Fed rate cuts that were finally, after years, were announced today and what it means for the markets going forward. So with that being said, let's get it. All right, so before you guys jump out of the video and be like, oh god, Fed rate cuts, guys, this applies to stocks and crypto. Okay, we've told you before that when the Fed cuts rates, interest rates comes down, risk off assets like bonds and cash come down, and people want to move their money to where they can make money, which is in stocks and cryptos. So let's talk about it. All right. So the first thing I want to go over is basically how the markets reacted. So we're going to take a look at that. You can see that the markets, well, obviously with the exception of the Russell, because the Fed rate cuts most heavily benefit the small caps because, again, borrowing costs matter more significantly to companies with smaller balance sheets than those with bigger ones. But they were mostly flat. Okay, they didn't go up or down. Again, there was a nice pump in the markets. Okay, there was a really nice pump. But again, the markets didn't really do much of anything. Once again, we're kind of just going sideways here. Pretty much the gist of what Powell said is what we have been saying on this channel. He pretty much reiterated what we said, which is that we said the Fed was likely going to cut by 50, not 25, not 75. Okay. Elizabeth Warren's idea of a 75 basis point cut is ridiculous. I think that's a little extreme. So we were like, no, that's not going to happen. So they did end up cutting by 50. Okay. So the yield curve has uninverted. That's the other thing I want to point out before I get too deep into this. The yield curve has uninverted. This will eventually reflect in the Fed funds rate here on TradingView, but you can see that the 2-year is now below the 10-year. Do I think that because the yield curve uninverted that it's necessarily going to lead to a slide in the markets to the downside? No, I don't. I'm going to tell you guys exactly what I told you before, and that is that the Fed was going to cut by 50 basis points. Powell was basically going to come out and say that him and his buddies we're in a consensus that they want to make sure that inflation comes down to 2% over time, okay? While simultaneously ensuring that unemployment stays low, okay? So there's three things here, all right? Inflation coming down to 2% over time, unemployment remaining low, and markets go up, okay? That's exactly what we got today. That's exactly what the Fed came out. Pretty much the Fed essentially came out and said today. They said that there's no reason to worry. Don't worry about it. And I know a lot of people might be thinking, oh, yeah, well, they probably always say that every time before the market's going to crash. Look, like I told y'all before, I think that by this could have been interpreted a bunch of different ways, okay? So doing a 25 could have been dovish. Doing a 50 could have been hawkish, okay, according to some people, because the 25 would be like, well, let's just test the waters and see. We initially thought that, okay? And then, doing the 50 could be like, oh, well, something must be wrong in the economy. I mean, it's all open to interpretation, okay? It depends on what people think. But we actually flipped our mindset and we decided that the 25 would be hawkish and the 50 would be dovish, not just because of the Nick Tomaros post, but also because of the fact that it just makes sense, okay? So if the unemployment rate has already been ticking up for the last 6 months or however long it's been, and they do a 50 instead of a 25, in this particular instance, if they do a 25, they might be moving too slow, okay? But if they do a 50, and then they can get ahead of the curve, and then they can be data dependent going forward in the opposite direction, just like they were when they were raising rates. They can be data dependent and adjust accordingly as they're cutting rates. That's the most bullish outcome for everyone involved, okay? So people get to keep their jobs, markets get to go up, the inflation rate stays low so people can afford everyday life. That is the scenario that we are foreseeing is going to be the outcome here. All right, so let's talk about the market reaction. So basically on the daily here, you can see not much really happened. I mean, we do have a tweezer top, technically speaking. There is a gap here. So at some point, maybe that may need to be filled. But I'm not really too worried about it. Again, it may take like a couple of days or a week for the markets to adjust. Maybe we get some kind of sideways consolidation and then boom, start ripping into earnings season, which begins next month. So that wouldn't shock me. The thing I want to point out here is that the markets, technically speaking, are at higher highs. Okay, so the body on the candle on the weekly time frame, as of right now on the S&P, is still above the bodies previously, and it's green. Okay, and the wick has already touched a new all-time high. This actually happened before the FOMC meeting actually took place, so it hit almost 57.60. So that's what I want to point out about that. Now, if I go down to the time frames, in basically the 15-minute time frame, you guys can see that there was kind of like a really huge spike here. Okay, pretty much right about 11 o'clock, and then Powell came out and they started speaking, and the markets were kind of unsure, and then they eventually just sold down, and then they weren't sure, and then it pretty much went back up. So here's what I'm thinking. All right, so going forward, the Fed cut by 50, so cash is going to probably sooner rather than later cash, that $6 trillion that I told you guys about that's sitting in money markets and bonds and stuff like that, that's going to begin flowing into the stock market more and more going forward, and not just stocks but crypto as well. Okay, this is going to be bullish for crypto too. As new data comes out and the markets begin to realize that there's really nothing to worry about, okay? As it becomes more and more obvious going forward in time that there's no reason for the markets to be concerned about anything, earnings comes out good, unemployment stays low. Let's see what else. Inflation stays low or goes even lower, which I suspect is probably still going to continue to cool, although not as aggressively as it did. Because again, if the Fed is cutting ahead of the curve, inflation will still drop, but it will negate inflation going into deflation, because if the longer that they keep rates tight, the faster inflation is going to fall and the higher unemployment would rise, or unemployment would rise. But if they get ahead of the curve, then that slows the rise of unemployment, which means that it can stay relatively flat while they remain data dependent, and or possibly even come down slowly over time to basically for them to get their maximum employment, which is part of their dual mandate. And inflation will continue to come down over time, but more slowly, without actually falling off a cliff, so they can maintain around that 2% inflation rate, which is their target. Okay, so that's kind of what I'm seeing here. Again, I know it's a mouthful. I know people are probably like, what the hell are you talking about? So that's pretty much what I'm expecting. All right. So in terms of crypto, it's pretty simple. The Fed's cutting rates. Okay. Usually when this happens, the crypto markets dump off a cliff. Do I think that's going to happen this time? No, I do not. Here's the reason being. It's simply put because the one time that the Fed did cut rates, basically pretty much the gist of it was they had to cut rates because there was a pandemic. I mean, what else is there to say? There was this crazy black swan event that nobody saw coming. Everybody was freaking out about it. Do I think we're going to get one of these black swan events during this Fed rate cutting cycle? No, I do not. Okay. I don't think that's going to happen. But it was unpredictable and people freaked out because they didn't know what to think about it. And they're like, oh God, everything's going to hell. Everything's going to zero, sell everything. People in the markets generally tend to overreact to massive news catalysts like that. Okay. When I saw it, I was kind of like, okay, what the hell is this? But, I was buying the dip on every dip that there was all the way down. I think I put in like maybe $2,000 in the Roth IRA or something like that. And it went down. I think it went down like $3,000, but after the V-shaped recovery, by the peak of the bull market, it was up 13,000. So, again, it's really, when people trade and invest in the markets, it really all comes down to perspective and emotional intelligence and self-control. Okay. A lot of people will freak out and overreact, and they'll like panic sell or panic buy or something like that. I mean, guys, I've been trying to tell you for ages, the whales don't operate like that. Okay. They're very smart. They're very emotionally controlled. They're very technical. Okay. I'll give you guys a small example of this. if I were to take a look at a position like what we currently have, like I'll go with Filecoin, for example. So we'll use Filecoin as an example. All right. So if I was looking at position for the bull run and whether I was DCAing it or just positioning, and I was a whale, where do you think I'd likely be buying? Do you think I'd be buying up here? Seeing that this, do you think I would assume like, oh yeah, this is going to break out and retest its support when clearly it was a previous resistance? Likely not. Okay. Do you think I'm going to be buying up here, way up here, when the price is so overextended from the EMAs that it's like eye popping just how crazy the overextension is here? Okay. This is overextended at the peak 188% from the last time it touched the EMA. Am I going to be buying up there? Hell no, I'm not. I'm going to be, I don't short the crypto markets, but if I was going to short, I'd be shorting at the top. I would not be buying up there. I'd wait, knowing the timing of the cycles, I'd wait for this thing to dump off a cliff and kind of base out. Okay. So just base out, appear like it's mostly going sideways, get some indication that it's going sideways, and then I'd be looking to buy at a base level support. Okay. That's what I would do. That's what people that have emotional self-control in the markets do. Now, the Fed left the markets with some level of uncertainty, okay? They're basically like, well, we're going to be data dependent. That creates uncertainty. I'll admit it. But do I think that's a reason to freak out? No. Look, they managed to raise the rates. I will say this. I'm going to give the Fed the benefit of the doubt here, okay? They managed to raise rates for years without causing a major recession. They've managed to do it for years without spiking unemployment to astronomical levels, without collapsing any of the major markets. I mean, we had like some minor banking crises, but they took care of that. Crypto still went up. Okay, of course, that's because of the spot Bitcoin ETFs. I don't think that's necessarily the crypto run. But I think that they're going to handle it just as well in terms of cutting rates that they did in terms of raising rates. Again, look, you guys got to understand, all right? It's an election year. It's not going to look good if there's a recession. Okay. It's not going to look good for politicians on either side if there's a recession. Nobody in Congress wants that. Okay. Not only is it an election year and you have two presidential candidates, well, I would argue that Kamala's not actually a presidential candidate, but that's a topic for another video, another conversation. So you have two candidates up for election, okay, or re-election in Trump's case. And you also have the midterms because, again, remember the midterms happen every 2 years. So Democrats and Republicans both are going to be on the hot seat this year because if the markets don't like what they get, a lot of these whales, wealthy investors, they're gonna want to toss the people out of office that are in office. They're gonna be like, "Get the hell out! We don't want you," right? Because it doesn't look good. It doesn't look good financially or otherwise. If markets are going down, if the economy deteriorates before the midterms and the election, do I think that's going to change after the elections? No, I do not. I think that likely the Fed is still going to be tentative, or they're still going to be focused. They're going to be heavily focused on making sure that the soft landing narrative, which is pretty much what was said in the FOMC meeting today, is guaranteed. Okay. Or as close to guaranteed as can be possible, which means they're going to have to do something different this time. And I'm sure the markets were not expecting that, but we told you already this was likely the expected outcome that we thought was going to happen. Now, what do I think is going to happen by the end of the year? Well, I'm going to show you guys right now. In terms of the markets, I will show you guys what I expect to happen by the end of the year, but I think it was more important to talk about these things before actually talking about the technicals here. So pretty much I'm going to tell you guys what I told you before. Okay. So we're still in September. There could be, still a little bit more chop. I mean, usually the back half of September is the worst part of the year. Do I think that's going to necessarily happen this time? Well, I would say that's as good as a coin flip. I think that likely we'll probably still be up and down and sideways going into October. And then when we get good data that's favorable for a soft landing, like CPI and jobs reports and stuff like that, and everybody's like, oh, wow, everything looks great, then we'll start to go up and earnings will happen. We'll get strong earnings. earnings will cause the markets to go up, and then we'll get that end of the year bull rally that we've been talking about forever, in the bullish seasonality, basically between October to December. But really, if I'm being completely transparent here, probably, I mean, the pullbacks that we've seen in time have been right around September and March. Okay. If there is any kind of pullback in the markets, I think it's going to be a small pullback like what we saw before. Okay. So something like these. I don't think it's going to happen until March. Okay. Because usually October to March is the most bullish time of the year. Usually the bullish seasonality is between October to December, but then you have the Russell 2000 that usually also outperforms between January to March. Okay. That's usually the most bullish time for the Russell 2000. So the bull run, the bullish seasonality can actually extend out to March. Now, in terms of March to April, I think March to April next year, Bitcoin's at all-time highs, crypto's going to the moon, stocks are at new highs. And then we get like maybe some kind of, sell in May and go away next year. And then we get another massive V-shaped recovery and a pump into the end of the year. Markets will continue to go up in traditional finance. So stocks and all that, anything in the stock market will go up. And then we'll likely see crypto top out sometime by the end of next year. Okay. And then in 2026, we'll get that crypto winter. Now, whether we get a stock market winter or recession or bear market, whatever you want to call it, in 2026, just because the liquidity index is slated to go down during that time frame, I don't think that. I think that that's one metric in a toolbox. Okay, I think it's a small piece. I'm not going to say I think for certain that there is going to be a downturn in 2026. If it was going to happen, I would say there's maybe a 10% chance, 15% chance it's in 2026, but there's no guarantees. Okay. Markets could just go straight through 2026, go up, kind of go sideways, go up like they always do. And then we see the same kind of crypto bear markets that we've seen while the stock market's still going in a bull market. So we could have, 2024, 2025, all assets go up. Okay. And then in 2026, stocks are going up and crypto is going down. And then in 2027 going forward, stocks and crypto go up until the next crypto bear market. We could see something like that. Okay. So technically speaking, once again, we're kind of just in this sideways consolidation block. I'm not really expecting much of anything different here. You can see that we were pretty much in this block from May till about September, and then October we started ripping, eventually came out of it until roughly about March of the following year. This one isn't quite May, but you can see if I pull this block back, you can see that we actually entered the block roughly about June, so not quite the same amount of time, but pretty close, and we've been mostly sideways. And then I expect in October we'll take off to the upside outside of this block. So in terms of crypto, well, I mean, it's the same story it's always been with crypto. Okay, look, we're inside the bull flag. The Fed just started cutting rates. That's very bullish for crypto. The M2 money supply is going up. Guys, I think the likelihood that crypto is going up into the end of the year is extremely high. I would give Bitcoin going to new all-time highs by the end of the year and continuing to moonshot into next year, and altcoins going to the moon next year, early next year, Q1. Most likely Q1, Q2, somewhere in there. Roughly about a 90 to 95% probability at this point that the crypto bull run is likely going to play out like that. So, again, we're not really surprised that the Fed came out and gave everybody a dovish 50. A lot of people that were asking questions of Powell were asking the same questions that he already answered, like, oh, well, what do you think is going to happen with the economy going forward? I mean, guys, nobody knows that. Okay, nobody knows that. Only God knows, right? The reality is they're going to have to be data dependent, and they're getting ahead of the curve, and that's what matters, and that's what they told people, and the people didn't seem to want to listen. So, look, I think that these things will reveal themselves in time, and I think that likely we're going to see the soft landings. So, and we will see markets. In my opinion, we will see markets rip probably sooner rather than later. So, anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later.